Good afternoon. This is Rich Nelson with Allendale, covering the wrap-up commodity comments. Today is Wednesday, August 24th of 2011. Obviously, kind of a lower day here. We did see December corn close down about 2.5 cents. Beans down 3 1/4, wheat down 8. Certainly slightly lower today as far as the trading, but no one's going to call this any big negative news here. Keep in mind, December corn just reached yet again a new contract high here today. So certainly we have quite a bit of enthusiasm still in this market here. We can't argue that probably a good chunk of the slightly lower tone today was due to concerns about Ben Bernanke's comments on Friday. Will he provide a QE, so quantitative easing number 3? If so, what kind of size package is he discussing here? So that's certainly more questions than answers as far as outside market influence here on the grains. But as far as grain fundamentals, honestly, everything still looks to be very positive for the short term. Ethanol production this morning, 904,000 barrels per day was the pace for last week. And that, of course, was a slight increase from 899,000 barrels per day in the previous week. So certainly a nice rebound in ethanol production, certainly good. If we average, so we only have 2 weeks left of the marketing year before August 31st ends. If those last 2 weeks average about 900,000 barrels per day, which is very attainable, it looks like we're going to end up with total ethanol, corn for ethanol, at 5.029 billion bushels. And that's right in the neighborhood of USDA's total year estimate of 5.020 billion bushels. So bottom line, we're meeting USDA's. In fact, we're a little ahead of USDA's goal for ethanol. So certainly that's good to hear on this end. Also, we do have crop tours going on. Allendale's nationwide farmer base survey is going on. Feel free to give us a call here at Allendale, 1-800-262-7538 in order to participate. Also, check our website. If you don't want to talk to us on the phone, we've got a nice link laid up for you on the website. You can fill in the information on your own. Main point here as far as corn, though, with these corn yields, with the trade generally feeling that yields are falling, we still have not hit Allendale's upside target yet for corn. We can make the exact same statement yet for soybeans. For wheat, though, we will point out today was an important day. We finally hit Allendale's minimum upside target for December wheat. So this is very good. We're very happy with the research we did on the wheat and price projections on this one. This does not mean we're turning bearish on wheat. It simply means we're finally turning from a straight outright bullish position and bullish viewpoint on wheat to now we're going to go moderate and moderate that view here. Over on livestock, we see cattle down about $1.10 today on the October contract. Certainly lower prices overall, a little concern. Cash cattle did trade today. Kansas 113, Texas some 112.5 and 113s. That was down about $1 from last week's trade, so a little disappointing on this one. Over on the futures, total losses in the past couple weeks. We have taken off $6 off the October contract, and that's due to drastic changes in the trade's viewpoint of bull supply due to the cattle and feed report, and also demand due to these outside economists suggesting that the economy may be slowing down here. Over on hogs, down 95 cents on the October contract, so certainly a lower day across the board for livestock. For the hogs, down 95 cents. Main point we can look at here on the hogs, the simple fact is we're seeing more numbers show up at the front door, and we're seeing cash hog prices respect that as well. Cash hogs down about $1 today on the Iowa-Minnesota run. So certainly a bearish trend developing on the hogs. And if you check our research product, which you can subscribe to, we have clearly posted our downside objectives for this December hog contract. We're going to repeat those downside objectives for you guys. In case you did not see that, we're going to repeat those numbers as far as that goes on tonight's wrap-up comments. So we still are a little ways away from getting that filled. Since the first of the month, neat little stat, we've dropped off $5 on the October contract. And I just mentioned we still feel there's a bit more to go. Find out exactly what that level is by subscribing to us. You can do that by calling 1-800-262-7538 or going ahead and checking our research product on the website, getting signed up that way here. But overall, a lot of exciting things going on here, certainly for us grains. We're kind of moving into holding patterns, certainly for tomorrow, until we see Bernanke's comments out on Friday. As far as main grain issues, as I said before, we still are very, very important, very interested in your comments regarding your crop in your own fields and getting your own viewpoint. We feel that our way of doing nationwide surveys should hopefully get you a better number to work with, get you more accurate data in your hands so you're prepared for USDA's next move in September. So feel free to give us a call here, 1-800-262-7538. This is Rich Nelson. Have a good trading day.